Okay, are we letting people, the live streaming on YouTube will start now? Okay. Okay. Hello, everyone, and welcome to a new episode in the Gerhard Center webinar series. Throughout this series, we aim to provide valuable insights, share practical experience, and engage local, regional, and international thought leaders and experts in discussions around issues related to development and social impact. For those who are new, my name is Kariman Shuair. I run the research division at the Gerhard Center for Philanthropy, Civic Engagement, and Responsible Business. And I'll be your host for today's session. With me today is Myrna Atalla, the Executive Director of Alfanar. It's the oldest venture philanthropy organization in the Arab region. Myrna is a great leader who has overseen the growth and expansion of the organization since 2010, enabling the pooling and delivery of over 10 million euros in grants, zero interest loans, as well as Alfanar's first equity investment, coupled with management support to over 130 social enterprises across the region, with particular emphasis on Egypt, Lebanon, Jordan, and Palestine. Today, Alfanar continues to innovate and disrupt by actively supporting the launch of the first regional impact fund. Sorry, we are very excited to learn about this newly established fund that's still in the framework of development, but before we kick things off, I'd like to remind you to stay muted during the conversation, just to minimize the background noise. However, feel free to ask questions in the chat or save them for the Q&A segment at the end. Also, this webinar is being recorded and will be shared as part of a new podcast series we've just launched called Gerhard Talks. Season 1 of this series will be all about impact investing, and it will include this interview with Myrna, as well as a selection of other conversations with thought leaders like Acumen founder Jacqueline Novogratz, Ford Foundation CEO Darren Walker, sustainability expert John Ilkenton, and others. To listen to the podcast, all you need to do is search for Gerhard Talks on Apple, Spotify, or wherever you get your podcasts. And make sure you follow the show so you don't miss the episodes when they drop. Also, one final thing before we start, I would like to let you know that the research unit at the Gerhard Center with the AUC Business School are working currently on a long-term initiative to produce a series of digital publications based on the webinar series. We're planning to publish thematic volumes, short blog summaries, webinar-based research briefs, and consolidated topic reports. So please reach out to us directly if you want to receive updates with these publications. Myrna, thank you again for joining us. We really appreciate you taking the time to lead this conversation. I'm sure anybody who works in Arab philanthropy knows of Alfanar and the great work you guys do in the region. It would still be fantastic if you could start by giving us a background about Alfanar and your work in the Arab region.
Thank you so much, Kariman, for having me and for shedding light on a growing movement. I think for all of us in the Arab region, we're very proud to be part of it. But at the end of the day, no one hand claps by itself, as we say in Arabic. And so, I think these discussions help to instigate and hopefully accelerate a movement that we can each sort of work together to create greater value and lasting change for our region that so desperately needs it. So without further ado, because we'll get into the nitty-gritty, You've asked me my favorite question, and you've also expressed how old I am, because I have been doing this for, I'm so proud to have done this for quite a long time. But, I'll give a little of the human story, and then a more about what we do. So Alfanar, we know, means beacon, lighthouse in Arabic. We were founded by late investment banker Tariq bin Halim, who wanted to find ways to support social purpose organizations at the time. We were much more agnostic when we started in 2004, but to become more self-reliant. This idea that maybe these amazing organizations working on the ground shouldn't be solely reliant on grants, donations, and philanthropy. So that kernel of an idea mirrored what was happening globally, because the global venture philanthropy movement had just sort of sprung out of the first dot-com boom in the late 90s and was beginning to take shape through the European Venture Philanthropy Association and other networks. And this basic concept, which we'll elaborate on further, that maybe the number of grants we send out isn't enough to tell us that we've done a good job. Maybe we need to track outcomes. Perhaps one size fits all isn't the solution. Different organizations will need different kinds of financing, different, time scales. So all of that is part of venture philanthropy and the social investment spectrum, which eventually has now, over many years, taken shape. But Alfanar is from the Arab region. And I think this whole conversation makes no sense if we're not talking about need. I mean, we can talk about zero interest loans and, and return on investment until the cows come home. But if we aren't really addressing why we exist, then we're not sure whether we're doing a good job or not. And so I always like to remind anybody I speak to that in the Middle East and North Africa, in the Arab region in particular, although you find that in the rest of the world, there are poorer in real term areas like Sub-Saharan Africa, like South Asia, but actually when you look at their trends, their poverty levels have been declining consistently, to the point where India just announced that it has eradicated extreme poverty. However, the Middle East and North Africa, since 2014, has had steadily increasing levels of poverty. That this is people living under $3.65 a day. And if I shifted this graphic to $5.50 a day, the percentage of the population living just above the poverty line, very vulnerable to falling under, we find that depending on the year and, the slice of the statistic, 50 to 70% of the region is living just above that line. In other words, whenever there's a devaluation, an economic crisis, a war, a conflict, an earthquake, a flood, suddenly you find people falling very quickly underneath. So we live in a very vulnerable part of the world. And so we're attuned to that. Our philanthropy has to be attuned to that. Moreover, what Alfanar does, because we are not an endowed organization, we're a fundraising organization, we pool the capital of supporters, whether individual, corporate, institutional. We decided we needed to be focused. We couldn't be, although we wanted to be agnostic, hopefully, inshallah, in time we can be agnostic. We wanted to make sure that we were tracking impact in particular areas of need. And that includes education, children's education in particular, SDG 4, where we find that 59% of our region's children suffer from learning poverty, an inability to read an age-appropriate text by the age of 10. SDG 8, we know that we have the highest youth unemployment rates worldwide for the last 25 years, and that with young girls, of course, this can reach nearly 50% in some places. Sadly, in terms of gender equality, we continue to rank last. And this is a cost to our region of around $575 billion a year, that gender inequality. We continue to host the largest number of refugees and migrants. And finally, SDG 12, which is a new addition, I think, in our focus area, given that we are set to run out of water first, that are rising temperatures, especially in contexts and countries that aren't able to spend on adaptation quick enough, that climate change is a direct tax on poor communities. And on the flip side, we are seeing lots of investable innovations. So these sort of SDGs 4, 8, 5, 10, and 12 are the sort of topic areas, if you will, that Alfanar is focused on and is looking for innovators that are responding to them in a sustainable way. I'll just maybe, should I stop here or shall I continue just a touch further?
Yeah, please go ahead.
Okay, brilliant. What we then look for is we are not operators. We are part of that social investment fabric that I alluded to. We're venture philanthropists, and hopefully we'll be part of the impact investment ecosystem as well. But we are looking for these ambitious, frontline social entrepreneurs that are very specifically focusing on those SDGs, in other words, improving the lives of disadvantaged children, youth, and women, and not in a theoretical sense. We leave idea stage and startup stage entities to many of our peers who do a brilliant job. But what we find is there's a major gap when organizations are growing, when these entrepreneurs are growing, and they need chunkier checks and more long-term support. It is oftentimes difficult to assess ambition and entrepreneurial spirit. I'll explain in our kind of approach how we try to do it. But most importantly, we don't just want community-based organizations. There are other organizations that are better suited. We're looking for models that can be replicated, that can be socially franchised, that can be scaled to another country, because our problems are shared very much. And the entrepreneurs are coming up with ideas that can be and ought to be invested for growth. We are very much focused on organizations, whether they be nonprofit or for-profit registered. So we're open-minded about that when we say social enterprise, but they have some form of sale of goods and services. And that is going to increase over the course of our investment. If it's not, we may pull out. Then possibly we didn't make the right call. So that's, part of the management support and how we work with our business plans and teams. The backables chief executive is often hard for succession, but it is one of the most critical elements to successful investment, because we know then where the accountability lies. In many of the organizations in our region, some brilliant organizations, they're run by boards, actually. And so we have to go in and shift the power dynamics, help create distinctions between non-executive and executive, and ensure that there's an engine in place that can really be held accountable. The last one, really, you learn over time. Many people are open to management support when there's a check involved, but you see that really by working with organizations over time. And it's not that organizations have to accept our management support wholeheartedly. There can always be disagreements, but there definitely needs to be openness to understanding weaknesses and how to address them. Shall I touch on this graphic just for the sake of our audience? And please, audience members, if I gloss over something too quickly, add it to the chat. I know Kariman will encourage you as well, but some of this can be a little bit in the jargon space. But if we think of the social investment spectrum as running from solely focusing on driving societal value on one hand, to solely driving financial value on another hand. And of course, this is very simplistic and this has changed, but it's just to create, simple rubrics for us to understand. You might have charities and philanthropies, especially humanitarian organizations, on the fully impact only side, all the way to the left, reliant entirely on grants and donations and having no trading revenue. Alfanar used to focus on those organizations, but in 2015, we decided, no, we will only focus on social enterprises because we needed to create that niche. So even if it's a nonprofit registered entity, because our region has particularities in terms of registration, there must be some form of trading revenue, even if it's side by side with grants. we then can move into some of these revenue generating social enterprises that, frankly, since 2015 have grown tremendously. The investment in incubators and accelerators and prizes, we're seeing the benefit of it. There are lots of organizations that want to register as social purpose companies that are already potentially sustainable, that are possibly breaking even and even profitable. And even Alfanar has already taken an equity stake in one of our social enterprises. So we're kind of dabbling in the further end, but what you find is we are a registered charity, and to do that kind of activity at scale, and we'll talk about it a little bit further, to really focus on that, group of businesses with impact, profitable, surpluses that are reinvested up to profit distributing, but socially driven. We needed to create an impact investment fund. So this is more or less a GP-LP structure where investors would be expecting not just the impact driven from their investment, but a financial return after 10 years. That is an affiliated but independent entity called Anara Impact Capital and Anara Impact Investment Fund. So it shows you a little bit that, for us at least, I know a lot of people use terms in big ways, but impact investment for us has a return on investment. It is impact first, but there must be a return on investment. Venture philanthropy and many other social investment tools, development impact bonds. I mean, there are many. We won't necessarily talk about all of them. Happy to, if somebody has questions. That has a broader range. And there we're using grants and zero interest loans for the most part, but I've already said that we have taken an equity investment in one of the entities where we felt it was appropriate. So that's sort of the spectrum. And then very, very quickly, because we won't be able to see that part, but the way we structure our venture philanthropy support is in stages. So seed does not mean it is a seed idea, but it's just sort of a way for us to test the waters, to provide our training in a shortened time, an accelerated 6 to 8 months, and for those organizations to also test us. It's kind of like dating, really, because getting married does require a little bit of knowledge. And we found that the best way is to work together. There's a financial award, but there's also our training. So 4 of our modules of our asset training as a way of getting to know their impact models and their revenue models. We then take a subset to business planning. And it is based on the results of that business plan that we go to our investment committee to request approval for 3-year sustained support. So, I mean, for when we first introduced this, it was revolutionary because, to be honest with you, you tell social entrepreneurs, go be bold, take risks, test out. But then they're looking behind them because every year they have to do fundraising and they don't know whether or not they met their revenue targets. Of course, we're not giving all of that funding all at once. Of course, we're doing due diligence. Of course, there's financial assurance. We are registered in the UK and the US and the Netherlands, as well as Egypt and Lebanon and Jordan. But conceptually, as social investors, if we really believe in those outcomes, we also need to put our money where our mouth is and to say, no, we will take a risk on you. And you can expect, if we're meeting these targets and we're having an open and honest, investment relationship that will back you for 3 to 5 years. And there you're beginning to see 100,000 per year, grosso modo, depending on the business plan. The scale piece is where the impact fund comes in, and as well as social franchising. We're working on social franchising of one of our largest microfinance investments in widows. And the last one is spread. That's what we're doing here, because the point is not to just do this in a quiet box all by ourselves. Of course, we wish for others to partner with us, but also to be inspired by our approach and perhaps to apply it in their own foundations, in their own philanthropic, efforts. And the last thing, because I, of course, am very, very long-winded, but how do you track investments across, so many sectors? You did mention appropriately, Kariman, that we've trained and supported 130 social enterprises, but actually provided funding to, because sometimes we just do the training, is 98 since 2004. And because we actually develop apps for each social enterprise to help them track their impact and their financial sustainability growth in real time. We have the numbers that back up this 107,000 impacted in 2023 and nearly 400,000 over the last 20 years. And something I'm especially proud of is the sustainability piece, because the impact piece, you could say, well, that's a lot or that's not a lot, you know, depending on what you're looking at. We don't report indirect impact ever. This is always direct impact. But the last thing is financial sustainability. That's what sets us apart. There are many organizations that do impact, but really, are we focused on, you know, the financial sustainability of what we're doing to make sure that if you're a donor and you trusted Alfanar with your donation, that what Alfanar left behind is lasting. That's what counts in the end. How are we going to change our region if every single time a project finishes, the organization shuts down and the program changes? This was really at the heart of our thesis and our theory of change. But what we found is that over the 20 years, we've given out £8 million in grants, and they have self-generated £18 million in the sale of goods and services. And over 50% are already breaking even, which is why, you know, we began to think of an impact fund. I'm sure I've overstretched my introduction, but I think it's helpful to set the stage a bit.
Yeah, thank you so much, Myrna. That was very helpful, and like it puts it all in the picture. We are, as we mentioned earlier, as Myrna mentioned, Alfanar is supporting now the establishment of a regional impact fund. We are very excited to learn more and to dig deeper into this. And thank you so much for clearing some technical terminologies in the spectrum, because a frequent comment that we get from those who work in the social space is that there are too many terminologies now: venture funds, ESG, social responsible investment, impact investing, blended finance. Yeah, there are a lot. And beyond the textbook definitions, sometimes practitioners in both social and investment spaces have different perspectives on what constitutes impact investment, and so on. So thank you so much for that. We would love to jump direct to learn and understand, if you can share with us the inspiration and the vision behind the establishment of this newly launched impact fund.
Absolutely. I'm sure that if we spent 2 hours, we wouldn't get to the bottom of the vernacular question and what words can be used where, but I think at the end of the day, that's not what counts, really. What counts is whether we're measuring what we're doing and whether we're making a real difference. And I think that's probably the most critical piece. And this is maybe just before I get to the impact fund, this is the pleasure of working in philanthropy, the flexibility, the ability to iterate and trial. I mean, a grant can be administered in so many ways. You can administer a grant based on activities. You can administer a grant based on outcomes. You can even administer a grant based on revenue match of the organization, if that's what you want to encourage. So even within just grant-based venture philanthropy, let's say, there are really interesting ways of working, and we should maybe encourage that element, even if maybe an organization isn't fully ready to be totally flexible, because that's very hard to then measure over time, but maybe allow yourself some 20% flex and understand the organizations you're with. But that's only possible in patient investment. And so that sort of brings me to this element of the impact fund. I remember as I was drafting the 2015 business plan, we're currently in the 22 business plan. And I remember sort of articulating to our board that if we were doing our job right, if the compounded annual growth rate of lives impacted was growing around or even over 40% for the organizations we back, and their self-generated revenue was also doing the same, that soon we should be considering impact investment. Because we don't, on the venture philanthropy side, for the most part, these are grants, this is risk capital, it's zero interest loans, but we're not really taking a stake in the next level. We hadn't been, especially at that point. And that if we weren't ready to do that, we should joint venture with an impact fund. So it was already kind of rumbling about. And in 2019, we began to articulate the thesis for a Lebanon-only fund, because so many of our investable entities were in Lebanon. There was just this explosion of social enterprise activity. In fact, even during COVID, two, if not three, of our portfolio entities began to scale outside of Lebanon very quickly. Now, that's quite a function of the size of the market, of course. It's not just, you know, some kind of nationalistic characteristic. I mean, if you tried your whole life, you might not cover the Egyptian market, even if you wanted to. So, I mean, we appreciate there's a distinction there, but that was where the original thinking started to, you know, elaborate. Thankfully, we did not do that because, of course, the entire economy of Lebanon dissipated in 2019, and then we had COVID, and then the Beirut explosion. And then actually, when we began to scope what the investable, you know, portion of entities could look like, it was reaching 100 million. Potentially, if you were really looking at the region, if you were really looking from Morocco to Iraq. And there we began to revise our thesis. And we said, you know, no, we've been doing this regionally. We're proud to be regional. Of course, there are specifications in our region. You have to be registered and work in a particular way. But we began to articulate the investment thesis for the first regional impact investment fund, with a particular focus on our countries of operation, Egypt, Lebanon, Jordan, Palestine. But Morocco and Tunisia have enormous amounts of activity, especially because there's been a lot of Africa-focused impact investment over the years. So there's a lot of that which has kind of led to, you know, accelerated activity. And we also wanted to be open, even though the Gulf is not necessarily a region of need, it is certainly a region of innovation. And it's a region where you can JV and partner and replicate and franchise very quickly. So some of these entities actually are finding that they can grow in the Gulf through, you know, various kinds of partnerships. So we wanted to do something regional. I guess maybe one more item to focus the energy on is, oh, but am I sharing something? Is this clear? Yes? Okay. Anara Impact Capital is the name of the hopeful independent but affiliated impact fund. And the idea behind Anara really was, this is not an exhaustive graphic, but I think it's helpful to think about, well, what is the ecosystem of investable entities between SMEs and tech startups? And really, we have to attribute the venture capital, you know, growth and the work of funds over the years has been, you know, massive. I mean, we've always been underrepresented in the VC kind of space, but that's shifted for sure. But if you go up to the social enterprises, businesses with impact, truthfully, the tickets tend to be a bit smaller. And when you need the 500,000 to 4 million, 5 million, you need the equity stake and other kinds of instruments. Actually, there's a lack. And that need of patient financing to be coupled with real understanding of how to track impact, how to strengthen it, we began to realize that actually we've been doing this and we should put it to the service of businesses with impact, and hopefully then not only raise a $50 million impact investment fund, but encourage other action in the space, because there's sufficient, or we hope that there's sufficient amount to go forward. Okay. I'm not sure I answered everything. There's probably a lot more to say.
Thank you, Myrna. And what are the key social or environmental challenges that does the fund aim to address? Or is it just, do you have priorities, and does it differ from, do these priorities differ from country to country?
So for now, Kariman, the first fund is envisioned to be uh, very much responsive to the areas of focus that Alfanar has focused on. I suspect that, inshallah, if there's fund 2 and fund 3, there will be greater specification. But what we've definitely found is what has become a nascent, I mean, it was a nascent space for us when we passed in 22, adding SDG 12, responsible consumption to our target area is actually, there is enormous amounts of activity here. So our first equity stake, even as Alfanar Venture Philanthropy, has been in an organization called Fabric Aid, which has become the largest textile recycler, upcycler in the Arab region. So what started, with 18 people working for it now has 150 people. It has multiple brands, so it has created an efficient value chain for recycling your clothes, but then reselling at micro prices to 70,000 plus poor clients a year. They have a vintage shop option, and they have an upcycling option for those items that can't necessarily be resold. So that is one sort of example, but also in the reused and the recycled cooking oil for use in biodiesel. This is a very big space in Egypt. It's a lot of cooking that happens among the 110 million people, but it's there are few different interesting organizations already. Alfanar Venture Philanthropy is working with one, but the fund itself in its pipeline has scoped others. And then probably similarly in kind of the knowledge economy, what we find in that youth employment response, so that SDG 8 and 10 space, this area, especially the Levant, it really does compete with Southeast Europe. So Ukraine and Georgia, and there's a fair amount of activity. Plus, we have more languages in many ways to be able to take on outsourcing work and to actually have digital freelancers in a growing manner. So we're looking at various investments in those spaces. Again, there has to be, the calculus, even if the areas are similar and overlapping with Alfanar Venture Philanthropy, the financial assessment is different, because once you get to the investment committee of the fund, we need to know that we can, realize a return on investment for our investors there.
Thank you, Myrna. I'll ask you the very cliche question. How do you balance between financial returns and impact goals? And if you can explain the decision-making process when impact matrix suggests the potential trade-off with financial performance.
Yes, it's not always so. It's much easier on the venture philanthropy side, where maybe you can take a little more risk on the financial returns because it's impact only, and test out new ideas, which is why we find that venture philanthropy and impact investment, they can dovetail each other very nicely at times. We feel that some of our organizations that have benefited from that, I mean, a grant is risk capital. A grant is a chance to strengthen your impact model and figure out how to scale it and really figure out what the financial return model looks like. By the point where you get to impact investment, those things really should be a little bit beyond testing and iterating. I mean, that's not always the case, but that's what you would hope. And so we have, for example, a head of investments at Anara Impact Capital, and we have a head of impact. So for us, the two partners, the two women partners, really need to represent that these are of equal importance to us. And so when you look at an investment memo at Anara Impact Capital, there's an assessment of how the impact model is growing, what the depth of that impact is. I mean, it's quite different, an education investment versus a recycled textile, clothing investment. And so assessing that, assessing the scalability of that, assessing the risk of that against the financials and the financial return possibility. I guess they probably just need to be a lot more balanced, and we probably pass on more on the fund because there's less ability for, I mean, I'm saying this now, we haven't done it yet. So, but this is, I mean, the investment committee has already begun to meet, is already assessing pipeline, because we're hoping that once we reach first close, we'll be ready quite quickly to make the first 4 or 5 investments. And they're already sort of brewing, if you will.
Thank you.
Sorry, Karima, I should just say one thing. We definitely try to look for lockstep models. I mean, this is like the dream space, that for every, additional impact you've created, there's been, a return on investment or financial return that comes back to the organization. This is ideal. It doesn't always work. But for example, when we look at natakallam.com, an organization we've supported since 2015, Natakallam endeavors to create dignified employment and income generating opportunities for refugees worldwide through the internet economy as language conversation partners, interpreters, translators. So there, every time you create a job or you appoint and employ, a Syrian refugee, or they've actually grown past Arabic. They now employ refugees that teach Spanish and French and Armenian, Kurdish, Persian, Ukrainian, Russian. So that's what I mean by scalable model. It doesn't just have to sit in the Arab world. We can benefit the world as well. But every time you employ a refugee, there's a payment. So there's not only a return to the refugee, and it's a meaningful one, but there's also a return to the organization. So that is where it really works out nicely, when the impact and the financial return are in lockstep. It doesn't always work. Yeah.
Yeah. Thank you, Myrna. And let me ask you something. Like, we see now some conventional investment firms are now establishing impact portfolios. Sometimes these portfolios are managed by people with minimal practical engagement in social spaces, and thus little understanding of social problems relative to someone like you, who have been always there. Some people might have trust for these brand name firms. How do you navigate this, and how do you see it affects the space as a whole?
I tend to be a glass half full woman. So I think that if we're part of a value creating ecosystem, then we need to call our friends out when they're impact washing or greenwashing, because in many ways, honestly, it's so cursory what's being done or claimed as impact. And instead, sell them our services in impact management so that they can actually stand, with confidence and report out impact. Obviously, I'm saying this a bit tongue-in-cheek because we can't do this so easily. And that's part of the reason why we decided, even though we come from the impact space and from the social space, there's a lot more in the climate, action space, I think, that moves towards impact investment more easily. But what I think inspired us to set up the Impact Investment Fund, or try to do so, is to show our peers that it can be done much better, and it ought to be done much better, that we owe it to our region not to just make a good financial investment in microfinance that sets interest rates which are so predatory that people find themselves worse off. That we do need to have eyes wide open when we're saying those words, impact investment. And what we hope is that actually we can encourage, well, that we can raise the $50 million. So, come and join us. And then the way we've seen impact investment work globally, whether it's in India or in Kenya, is that you need a first mover. And who better than a first mover that is of the region, that is not afraid of, look, let's be clear. Part of the reason that people don't come towards us is we have huge risks. We have big uncertainties. But when you're from the region, you're able to navigate them slightly more easily than those from outside. So who better than to start to be the first mover, and then hopefully you can begin to attract the European impact investors, the US-based impact investors, the Asian impact investors. So our hope is not to be the one and only story, but is to really encourage the standard to go up, but also to crowd in more impact investment for our region.
Okay, let me ask you a related question. You, as you said, like you don't want to be the only story, but do you think sometimes there is benefit of like not everybody has to do an impact fund themselves. Not every philanthropic organization should do. Can we just like share the fixed cost, the knowledge, and this could overall, I'm thinking like an economist.
You are 1000% correct. It's the same reason why I love to see mergers and acquisitions in the social enterprise space. I mean, honestly, how many, you see organizations that are all spending on accounting, all spending on legal, all doing relatively similar things. And you think, my goodness, if you would all joint venture, we could really do something big. I don't disagree. First of all, we should not be loose with the terms. To set up an impact fund requires enormous amounts of patience, knowledge, expertise. It is not the same as a venture philanthropy organization. You definitely need funds on the balance sheet. We are still not certain, despite our, longevity and expertise, that we will, achieve the first launch, but we are doing our best, to bring together family offices, to bring together regional believers, and to bring development finance institutions, because we need all of it to come together. I would argue we should probably support this one first and fix what doesn't go right. That if you're interested in impact investment, take a ticket, take a small ticket, but see how over a 10-year closed-end fund, how it works. I've seen a fair amount of organizations tell me, oh, we're setting up an impact fund. Oh, it is not economically viable. It is very hard. You need you need a certain level of, assets under management to make sense, so that it can actually, both run itself and not be run in perpetual deficit, but also have sufficient, manpower to be able to identify those meaningful investments and also support them. The point is not just to throw an investment in that. I mean, there's a fair amount of sleeve, rolling in that process. So I would definitely argue for, at least in this early stage, to back one to a few, but not an enormous amount of horses. Let's not be so loose with our terminology that everything is impact investment. Then we don't know what impact investment is. If it's venture philanthropy, brilliant. If it's a development impact bond, amazing. If you can get that off the ground, I wish we could. We could never been able to do that, but there are different, and different tools are, are appropriate for different organizations, A pure social enterprise, frankly, no. A business with impact can accept impact investment. So even there on Anara, we've changed our terminology. We've had to learn too. So yes, let's all get Anara Impact Fund off the ground, and if it doesn't work, let's share the lessons learned. So that we don't waste our time, because nobody said that it's the silver bullet for all of our issues. No, we need government intervention. We need government reform. We need, regulation. There are lots of things that we need to encourage impact. And we still need our charities and our NGOs and our nonprofits. What is happening in Gaza, there are no social enterprises that can respond to what's happening there today. So, I think sometimes we get very excited by impact investment. It is a fantastic tool. We need it. only 2%, 1 to 2%, depending on the study, of all impact investment worldwide is actually being directed to the Middle East and North Africa. And yes, people will say, oh, that's supply. There's not enough supply, and that's what we've been working on for 20 years, is really to help grow that supply, but also with the support of so many organizations. I mean, even the entrepreneur specific, the Flat 6 Labs, they do impact too now. Change Labs does impact too. Berry Tech, the entrepreneurship folks, they've also lent their expertise and their energies to impact. So suddenly we are seeing supply, but there's also a seriousness that comes with impact investment that we need our businesses to get comfortable with so that they can grow. And that patience, because at the end of the day, there is a huge amount of error in our region. The best laid plans will not prepare you for October 8th. They won't. I mean, we approved at Alfanar our first sustain for Palestine on September 14th. It was, I had done a seed cycle. We did business planning with 2 of the organizations out of the 8 in the cohort. We focused on 1. We approved a long-term sustained support to a brilliant water company from Ramallah. They've developed, it's called Flowless. They've developed a hardware software solution that helps farmers and municipalities detect water leakages to reduce water costs, nutrient costs, energy costs, increase take-home income. And you realize sometimes, even though we can't respond in Gaza, but sometimes the most disruptive thing, because you're from the region too, and you have an appetite and an ability to understand, how to maneuver, but also sometimes the most disruptive thing is to continue doing what you're supposed to do and what you aim to do and what you said you would do. And I can tell you that first disbursement of the grant, and we get lots of thank yous, but this was like a special thank you, like, you haven't given up. And we won't give up. And they've already now registered in Estonia. They now have contracts in Tanzania. They're continuing to grow. It's a scalable model. So I think it's important for us from the region to gather together and to understand those challenges that are facing us and to figure out ways within our own missions. As you say, we don't all need to do the same thing. We don't all need to do humanitarian work. If there's some brilliant organizations, let's back them. They're able to be more efficient. If some people know venture philanthropy or impact investment, let's back them. But I think there's a responsibility to rewrite the narrative for our region. We're a region that has enormous amounts of innovation, enormous amounts of resilience, enormous amounts of courage. And our social investment practice should also mirror that. Okay, now I've gone on a tangent.
Oh, thank you, Myrna. You said like very, very critical. You've mentioned very critical keywords like resilience and the importance of writing our own narrative. And this requires Arab money from the region, right? And you've talked about the need, like, for you to get your fund kicked off. You need patient capital. Do you see a great appetite from younger generations of Arab philanthropists to support such an infrastructure organization, or they still prefer to do in the conventional charitable giving? How do you see the landscape changing?
So, I mean, already, in what we've raised to date, we are incredibly grateful to the generosity and the belief of, families and individuals that have come together to really to state the case that actually, no, we believe in this region and we believe in this thesis. So, I mean, we're moving along, I'm very positive about it. I feel that we will get there, and we will get there with Arab money. I cannot blame Arab money on its own, because the very reason I mentioned why you know, we need to stand up and take that first step is also the reason why investors are reticent, because they're overexposed to, I mean, when you're a family business that operates in the region, you're incredibly exposed to the risks of the region as well. So in many ways, your investment appetite going outside makes sense because it, you know, manages that risk a little bit. But what we try to sort of argue and to show is that as these businesses grow, they become more immune to, let's say, the ripples in one place and can manage the sort of impact growth and financial growth aspirations more assuredly. What I would also say is I do believe that we will get to our first close, but we still need, I think, that kind of managed risk, especially on a first-time fund. And we're lucky to be in conversation with development finance institutions that can help also encourage. I mean, it's not a small step. I mean, we've seen some really terrible situations occur with funds that promised one thing and did another in our region. So, you know, we cannot fault Arab, you know, investors, you know, for being reticent and skeptical. So, you know, what is helpful is when we can use catalytic capital. So capital that comes in to match, and we're already in conversation with entities around, you know, such instruments, capital that is willing to forego return, just take principal, so that it encourages those investors already, you know, overexposed to the region to take one more ticket for the region, and one more ticket that spells out, you know, impact. So there are ways to structure it so that you know, our Arab investors, who we're already very grateful to, but, you know, hope to kind of push on for the last 10 million or so towards the first close, to encourage them to make the next step. I do think you said something about young investors. I definitely think that there's appetite amongst them. I did read a report recently put out, you know, yes, we read a report that showed that the young investors, I think it's the Pearl Initiative that put it out, really like to do it themselves, though. And I think the issue with a fund is you're pooling your investment so that you can go further. And I wouldn't say that's just a characteristic of young investors. I think it tends to be, without being essentialist or reductionist, we have a tendency in our region to like to do it ourselves, and to like to be the operator. And so I would say this is definitely, it's a new test. It's a test in trust building, and that requires a lot of communication.
Thank you, Myrna. Before we take questions from the audience, please feel free to raise your hand, and I'll call you to just address your question directly to Myrna. Till we get the questions, I just want to ask you a question about stakeholder engagement. One of the great things that I personally respect about Alfanar's work, when you talk to the people who work with you, they are relatively very satisfied with how you are close to the communities that you serve. This is something very important. So I'm just curious to know, are you gonna like do the same approach that you normally do in your venture philanthropy chapter, or when it comes to impact investing and, you know, that heavier weight that put in financial returns will change your approach?
What a great question. I mean, I think fundamental to the venture philanthropy model, so not just Alfanar, is that this is not arm's length support. So in fact, the management support is the glue to the venture philanthropy process. I mean, the funding, as much as we've talked about it, isn't unique to Alfanar. There are many organizations that fund, but you know, while we may be registered and we have a headquarters in the United Kingdom, but we have a team in Egypt, a team in Jordan, a team in Lebanon, and on a bi-weekly basis, we're having conversations with the social enterprises. We're never surprised by a report. Ideally not. If we are, then there's definitely an issue. I mean, that's really the idea, that it doesn't always work perfectly, but of course, that's how we would hope it would work. The fund, I mean, a $50 million fund is aiming to have around 20 to 25 positions. So in its fullness, and the way the organizational structure works out, the intention is to provide maybe not the exact same level of support because it's a longer period of time, but similar levels of support. And in addition to the $50 million in investment capital, the fund is aiming to establish around $5 million technical assistance facility. So an opportunity for those investees of the fund to access non-dilutive capital that they can use to strengthen the organization in ways that are agreed with the impact investment team. So no, I mean, I hope the intention of helping to launch an impact fund that, is inspired by our work is that it brings, a similar level of care and attention to its investment process. You're on mute.
Sorry, Myrna.
You're not on mute. Yeah.
Do you have questions from the audience? Okay.
I've answered all the questions. I'm so excited.
Yeah, yeah, that's my fault. No, really, thank you, Myrna. It was really a great conversation and an eye-opener, really. And thank you for the audience for joining in. Yeah, I encourage each one of you to consider the role you can play in advancing impact investing in the region. Or not just impact investing, as we agreed, like keep innovating.
Social investment in general,
Social
yeah.
investment, keep innovating and looking for more creative and disruptive tools to leverage capital for both profit and purpose. Thank you so much.
100%. Thank you so much, Kariman. Thanks to everybody. And if anyone has any questions, you know how to reach out directly as well. Okay.
Thank you so much.
Thanks. Bye-bye.